In front of me here is the full step-by-step process that I've personally followed to raise millions of pounds from private investors to fund my property deals. And it's the same process that you can follow. It's a proven process. I'm going to take you through it step by step. And if you implement this process, you too will be able to find and attract private investors that can come in and fund the property deals that you want to do. There's a lot to get through, so let's dive right in. So starting over here, this is what we're going to be covering today. How I get strangers to give me hundreds of thousands of pounds to buy property deals. And these are deals that have 50,000 to £1 million plus profit margins. And I'm going to go through the step-by-step process. This is a proven process. And raising finance from investors, you can see here the first point, it's the most valuable skill set you can learn in property. It's a timeless skill as well that will serve you for decades to come. It's a skill once you've learned, it's not just going to serve you once, it's going to serve you over and over again. And ultimately, it unlocks the biggest bottleneck in your growth as a property investor or developer, which oftentimes is capital. You might be able to find the deals, but you just don't have the capital to fund them. And so also, I want you to think, what would it be worth to you to have the skill of being able to raise finance from private investors to fund your property deals? How much profit could you generate if you learned this skill? Are we talking hundreds of thousands of pounds in potential profit over the next 2-3 years? Or what about of your lifetime? What about of your entire career, multiple, maybe decades of being a property investor? It's millions of pounds. And every year that you don't learn the skill, how much is it costing you? How much missed opportunity are you leaving on the table? And I'm a firm believer that success leaves clues. So Grant Cardone, he built a $5 billion real estate portfolio in front of my own eyes. I've been following this guy for 10 years. And he's done that. He's built a multi-billion-dollar real estate portfolio and really probably achieved close to billionaire status, if not already right now, because he went and raised finance from private investors. His audience, he would not have been able to have done that with just his own capital. The famous Candy brothers, they built the prolific One Hyde Park in Knightsbridge, very famous, very reputable developers in London. The reason they were able to do that deal is because they joint ventured with a billionaire politician from Qatar. Stephen Schwartzman, he built the most successful property investment company in the world, Blackstone. And as of right now, their website says they own $602 billion of real estate. And they've been able to do that because they've raised over $300 billion from private investors. And Stephen Schwartzman, he's a billionaire. He's put the B on the scoreboard. Multiple billions, actually. Donald Trump, love him or hate him, very successful property developer. And many of Trump's real estate deals were joint ventures. For example, Trump Tower, one of his most prolific deals, was a joint venture with the Equitable Life Assurance Society. And just some quick proof that the process I'm going to share with you not just works for me, but has worked for other people. Jamie Matthews, he went through this process, raised $453,000 for 3 HMO deals. Harry Barlow raised $90,000 to purchase a bungalow in Sunderland and a house in Wales. Chris O'Malley raised $70,000 within 23 days of learning this for a property bought at auction. Dean Wood came and worked with us within 30 days, got a commitment from a potential investor for £300,000. And Conran Reynolds raised £190,000 from 2 investors to purchase 2 deals with a combined projected profit of over £100,000 in his pocket. So let's get into it. Where do we start? Well, let's start with the start. There's a couple kind of first principles that I want to share with you guys, kind of help you understand from a 30,000 foot view how I kind of look at property. And the first and important thing is you need to have long-term thinking. If you want to be successful in well, not just a property game, but in business, you need to expand the time horizon for which you're thinking, of which you're measuring success, especially those at the very, very early stages of your career. Bill Gates famously said most people overestimate what we can achieve in a year and underestimate what we can achieve in 10 years. And that is so true. And so really, when you're coming into the property game, sure, we all want to get quick wins. We all want to see some kind of meaningful progress over 12 months, but you really need to be thinking in terms of years and decades rather than weeks and months. And we think long term, which I'll move on to cover this on the next point, is long term, you have these flywheel effects, these compound effects. And flywheel effects are similar to compound effects, where as you begin to do more within the business, as you begin to get traction and get momentum, it creates this flywheel where the more progress you get, the quicker your growth happens. And so I've got another video on my YouTube channel, Property with Tyler, where I talk about how I'm using flywheel effects within my property business. But all of the most successful businesses utilize and have flywheel effects. And one of my favorite examples of flywheel effects in business is Jeff Bezos with Amazon. Bezos realized that, okay, in order to grow Amazon, they need to improve the customer experience. And the way to improve the customer experience was having as many products available for sale on Amazon, because the more products they had available on Amazon, what that meant was those that were going on the Amazon website were finding the products they wanted at better prices, because there was more competition amongst sellers. And in turn, when there was a better customer experience, that would drive more traffic to the site, because customers would come back and they'd also tell their friends about the site. So that would drive more traffic, and that more traffic would then attract more sellers, because you have a product to sell. If you have a store, you want to make sure your product is on Amazon, where you can capture some of that traffic. So the more sellers they were attracting through the more traffic meant more products being sold on Amazon, and therefore there was a higher customer experience, a better customer experience, which then, as you can now see, creates that full loop where the more you do of something, the quicker the growth happens. And the same is in property. The first deal, which we're going to talk about again a little bit later, is always going to be the hardest. But once you do that first deal, that creates more confidence. It means you've built more trust with prospective investors. You've learned all of these lessons. So the second deal is a little bit easier, and the second deal might be a little bit bigger. And then you extrapolate that out over years to come. And what you'll see over the long term is your growth is exponential. You look at Warren Buffett's wealth over time. You look at Jeff Bezos's wealth over time. You look at Elon Musk's wealth over time. You'll see that it's exponential. So that's important of understanding flywheel effects and long-term thinking. And secondly, with long-term thinking, look at the Sunday Times rich list, look at the Forbes list. Yes, you see that huge name, that huge number next to their name of the net worth they've achieved. Also look at their age. And oftentimes you'll see their age is, the majority of them are very old. They've been doing it for decades and decades. So think long-term, understand flywheel effects. And then secondly, I want to share with you the idea of changing mentality from being a landlord to a business owner. And so a landlord is someone that thinks in terms of, I'm going to save up my own funds. I'm going to take some money that I can save at the end of each paycheck. Might be several £100, might be £1,000, might be more, and save up, buy a property and put all the money into that property. And then back to the drawing board, back down to zero in the bank account, save up, buy a property. And there's nothing wrong with this, but the reality is it's going to take you a very, very long time to achieve a meaningful level of wealth, to achieve a meaningful income through just saving up and relying on your own capital. Whereas a business owner mentality in property investment is thinking in terms of scale, thinking in terms of how can I unlock various bottlenecks to get to where I want to get to much quicker. And coming on to really the next point, well, what are those three bottlenecks? So three bottlenecks is one, access to deals. How many good deals do you have landing on your desk? Because you don't have any deals to go and buy. You simply don't have a property investing or developing business. The second one is capital, access to capital, because if you don't have the capital to go and fund these deals, the money to go fund these deals, well, then you still don't have a property business. And then the third one is team or operations or delivery, because you can have all of the best deals, the most profitable deals land on your desk. You can have the capital, the money to fund these deals, but if you don't have the right team or systems or operations in place to deliver these projects, to actually see them through to completion, well, then it's going to cause you a whole world of chaos. And a business owner compared to a landlord, they're thinking in terms of these bottlenecks. How can I unlock these bottlenecks? How can I do more and basically accumulate more resources as quickly as possible? So business owners in the property investing space, they think like business owners. They treat property as a business. And you look at, actually, side note here, the biggest property investing businesses in the world, the likes of Blackstone, these private equity companies that built multi-billion dollar portfolios, they're finance businesses at the end of the day. So at some point, most people on their property investment development journey realize, actually, The real estate game is just a finance game. And those that understand the finance side, those that understand the things I'm going to share with you in this video, are the ones that win and the ones that hit it big. So that's first principles. That gives you an insight into kind of my worldview when it comes to property. Now, the second thing that I want to touch on is what I call the transformation process. Now, the reason I want to talk about this here is because I believe that all success in property, in business, in your finances, in your relationships, is downstream from mastering the inner game. Because the outer world, all of your success in the outer world, is really just a reflection of your inner world. And the transformation process I'm about to share with you now is a 7-step process I take people through to make sure their mind and their inner game is in the right place. Because you can have all the theory. You can know all the theory, have all of the knowledge. But if your mindset and psychology is not in the right place, I promise you, you will constantly self-sabotage and you will become the obstacle. You will get in your own way. And so the transformation process is this incredibly transformational process that I've taken myself through many times, and the hundreds of people that I've shared this process with in the past, the feedback is just unbelievable, and years go by and I still have people tell me how impactful it was. And so this sets the initial conditions for your success later down the line when you're executing and implementing the theory. So step 1 of the transformation process is crafting your compelling vision of the future. And I believe, and I've seen, that most people don't get what they want out of life because actually they have no idea what they want out of life. They think they know, they have some kind of surface level idea, but actually when I press and I kind of ask them to go below the surface, most people have no idea what they want out of life. They have no clarity, no real depth to that. And the importance in clarity is clarity creates intention. When you're really, really clear on what you want your life to look like and what your life needs to look like, you can be far more intentional with your learning. You can be far more intentional with the people that you then go to surround yourself with or you learn from, etc., etc. And what it does when you have that clarity, you have that awareness, it opens up the power of the subconscious mind, which is the most powerful part of our mind. And really the brain's reticular activating system, which is the part of the brain that filters the millions of sensory inputs that we get on a day-to-day basis and filters out those that aren't important to us and draws our attention to those that are important to us. When your reticular activating system is dialed in and it's clear on what you want out of life, it easier creates and identifies opportunities that you otherwise would have missed. And ultimately it's understanding this, which is why some people are able to bend reality in their favor and really just bend the universe at their will and ultimately get what they want, manifest what they want out of life, and others remain victims of circumstance. The word manifestation gets thrown around a lot. Some people think it's just put some photos on a vision board and hope it happens. I don't believe in manifestation as this woo-woo, whatever, that, say it out loud and it happens. Manifestation, there's a science behind it. It's getting really clear on what you want. It's getting your mind and your reticular activating system tuned in with what you want, obsessing over what you want. And what you find is, combining that with action, reality can bend in your favor. And so the compelling vision of the future is a document that you put together, clearly outlining in excruciating meticulous detail what you want your life to look like in a 3, 4, 5 year time horizon. And it's written in the first person and it's written in meticulous detail, because when it's written in meticulous detail, when you're reading it back to yourself, it's so much easier for the mind to visualize this life, which then creates this emotional response and it begins to condition your mind, condition your nervous system. And that's what you want to do. And so there's some very clear instructions that I give people that want to go through this process on crafting their compelling vision of the future. But it's one of the most powerful things you can do. It's one of the most powerful 2-3 hours that you can just set aside and turn your phone off and just write. And it creates this new excitement for life, this new life force inside of you. Step 2 is then getting clear on your umbrella goals. Now, the umbrella goals are essentially the 1 to 3 most important goals in your life right now. That if you hit these goals, all the other goals in your life will happen as a byproduct. And the reason I talk about these umbrella goals is because most people make the mistake of at the start of the year, they write 20, 30 goals that they've got. But again, if you want to bend reality in your favor, you want to manifest the life that you want, you need to hyper obsess and think really all day, every day about what you want, about these goals. But when you have 20 different goals, they're impossible to remember. And so what you need is 1, 2, or 3, what I call North Stars as well, that are so easy to remember that you can think about from the moment you wake up to the moment you go to sleep, that if I can just get to these goals, first of all, everything else becomes irrelevant and you can hyper focus. But when you then achieve those umbrella goals, then all the other goals you have happen downstream from that. And oftentimes this is a financial goal, and this is a health goal, and then it's some kind of other goal relating to maybe family, etc. So these umbrella goals will act as your North Stars that you obsess over daily. Step 3, in my opinion, is probably the most powerful step if done correctly. Step 3 is called you versus you, and is built on the understanding that who you are now and the version of yourself living your compelling vision of the future are two totally different people. Who you are now is not who you need to be. And this can be quite hard to think about. It's something you really have to spend time getting clear on. Now, the future version of yourself that has achieved the life you desire, they have different habits and behaviors, different skill sets, more knowledge, different belief systems, different character traits, and a different environment. And if you were the type of person that was capable of achieving the goals that you have, based on who you are currently right now, you would have achieved those things. And so an inconvenient truth, and I call it an inconvenient truth because it's often not nice to hear, and sometimes you'll hear me say this, and some people hear me say this and reject it, and it creates a negative emotional response and they want to reject it, but you need to sit with this thought for a second. Where you are now is exactly where you deserve to be, because where you are right now is just a byproduct of all of the decisions, habits, behaviors, beliefs that you hold. And I don't like hearing that either, because of course I have things I want to achieve, and I often very much feel like I've not achieved the things I feel like I should have achieved by now. But I also recognize that actually who I am right now probably isn't the person that's capable of achieving what I want to achieve, and therefore there's a character evolution that needs to happen. And this is also built on the understanding that you don't chase success, you attract success. And to do this, to attract success, you must become someone that attracts success. A good example of this is you don't, to make $1 million, you make $1 million by becoming the type of person that can make $1 million. And it's also why you see people that win the lottery that are then given millions of dollars. The statistics show that the majority of them, the very high majority of them, within 12, 24, 36 months have lost all of that money because they had the money without the character traits, without the skill sets, without the knowledge of being a millionaire. And it's why if you took all the money away from all of the millionaires and billionaires in the world and gave it to all those that aren't millionaires and billionaires, it wouldn't be long before the money ends up back in the hands of those millionaires and billionaires, because they have the character that attracts, they have the character traits, the skill sets, the belief systems that is attractive to money. And so the purpose of this step, of step 3, is to identify the differences in who you are and get clear on who you need to become so you can work to close that gap, so you can become that person you need to become, which will then attract the life that you want. And ultimately, this allows you to step into a new character and kill your old self, because then your old self isn't serving you. And yeah, one of my other favorite quotes from Jim Rohn is, become a millionaire, not for the $1 million, but for who you will become as a product of becoming a millionaire. It's all about the character development, the inner game. Step 4. This is also one of my favorites. Act as if. So building on the previous step, the mistake people make with visualization is that they spend too much time visualizing about what they want to have and not enough time visualizing who they need to become. And so after completing step 3, you will hopefully have more clarity on who you need to become. And when you can spend a lot of time thinking about that and getting clear on what does that person look like, it's a really exciting thing to think about, in my opinion. It's like, what does that future version of myself look like that has achieved this life? The more clarity you can get on that, the better. And so what you can then do is basically an exercise that I call acting as if. So when you're clear on that person, it allows you to start acting as if you are that person in the present day. You condition your mind to recognize and become this future version of yourself as you go about your day, and as you're making decisions and as you're operating through your day, you can act as if you are that person already. And what we then see happen is the universe will start to bend around you, and you'll start to achieve the success that that person you are acting as if you are requires, and is the success that they are due. And so this is what Neville Goddard, someone that I've studied and love to listen to, he called it thinking from the end. Thinking, operating, acting, behaving as if you are that end version of yourself, the highest version of yourself. Step 5 is then understanding your compelling reason why, because he who has a why will bear any how. And I can't tell you enough that achieving success is hard, and it will test your character. To persevere, you need clarity on exactly why it's a must that you succeed. Because in life, you don't get what you want, you get what you must have. We all want nice things. The people that get the nice things and get the life that they desire is not just because they want it, it's because for them it's a must. It's not a should. It's not a should have, a would like, a want to have. It's a must. It's a need. And the way to really tap into that is really looking inward, because surface level motivation is not going to be enough. Understanding your compelling reason why requires you looking inward and going deep. But when you find your compelling reason why, when you get to that reason why, which you might think you know what it is, but actually the exercise that I take people through called 7 Levels Deep, it really gets to the root cause. When you get to that, it unlocks this life force that you never knew that you had, this state of certainty, this energy that's more than just how much sleep you did or didn't have and how many carbohydrates or coffees you've had. It's an energy that's beyond that. And that's what you really need if you want to really go and push through and persevere. So step 6 is all about inputs and outputs. Most people obsess over outcomes, but outcomes are just reflections of inputs compounded over time. If your outputs aren't changing, it's because your inputs haven't. And so to achieve any outcome, the outcome that you want, you must first understand what drives that outcome. Every goal has a specific set of levers, actions, habits, focus areas that create these disproportionate results. The key is to identify these levers and double down on them relentlessly, while eliminating everything that only feels productive but isn't truly moving the needle. When you get clear on what these inputs are, it helps you understand actually what are the things I'm doing which feels productive but actually isn't productive. The noise gets you to the signal away from the noise. So you can just focus on the things that help the boat move faster. In this step, you'll map out your desired outcome and its critical inputs. For example, the 20% that produce 80% of the progress. And it sounds obvious, but sometimes you actually just have to take the time, think, what actually moves me forward? What is actually getting me the result? And that's what I want to share with you over the course of the rest of this video. What are the things that you can be doing to driving yourself forward in your property investing business? And the final step, step number 7, is what I call making it real. Because your subconscious mind only acts on what it believes is possible. If you don't believe with certainty that something is possible for you, you're never going to go all in. You're never going to play full out. So if your dreams still feel distant and you're not capable, it's because your nervous system hasn't yet experienced it. The mind needs evidence. The mind needs evidence that it's real and that it's possible for you in order to really give you that confidence to go after your goals with full speed. If you have any doubt that it's not possible for you, well, then that's going to show up in your execution. And so the mind needs evidence, and the fastest way to create that belief is to immerse yourself in the environments, people, and symbols that represent the life you're moving towards. So if you want to drive a certain car, for example, if your dream is to, for me, for many, many years, from the age of 15, 16, my goal was to buy a Lamborghini. And I achieved it at like 5-6 years later. In fact, it was longer than that. But for the years leading up to it, like I would do whatever I can to get in proximity with Lamborghinis and Lamborghini owners and going to the showroom, making friends with the salespeople and going to the events because I needed to feel real. And I'd conditioned my mind, conditioned my nervous system to believe that it was possible. And I would meet people that drove Lamborghinis, and I would have conversations with them, and I would actually then take them off the pedestal, because getting to know them, you understand that they're just like you and I. They're just like me. And that's a very empowering belief system. If they can do it, I can do it. They're not these hyper-intellectual, gifted, high IQ people that are impossible to compete with. They're just normal people that learned the skills, acquired the knowledge, took the risks, etc., etc. So if you want to drive the certain car, go do what you can to get in proximity with that car. Go to the showroom, go to the car events, whatever. Go meet the people that drive those cars. If you want to live in a certain home, go drive down those roads where those homes are. Try and meet people that live there. Go to open houses and view these properties. If you want to stay in 5-star hotels, go to the hotels. Go to the hotels, sit in the lobby and just order a coffee or a tea, which will be £10. Just take it in. Just get your mind used to the idea that this is normal, this is possible, this is real. And it's not about pretending. It's about conditioning your reality. When your senses experience something as real, your mind stops resisting it. The desire moves from fantasy to familiarity, from one day to inevitable. And this is something that I've conditioned my mind to believe. When I set a goal, it's not one day. When I've set a goal, it's like that goal has already happened in my mind. It's just time hasn't caught up yet. Cool. So that's a transformation process. We've been through first principles, transformation process. The next thing we need to do is figure out your strategy. Like, you want to go into this process of learning to raise finance from private investors and find profitable deals with a strategy. And so the first thing that I always encourage people to look at is like, what is your 1, 3, and 5 year goals? Like, what are we trying to do here? Is it cash flow that you need? Is it a certain net worth figure, etc., etc.? And just starting with that. Once we have those goals and we've identified kind of what's the asset class that we want to be buying and developing, or the property strategy, what is the size of deals or the numbers behind that drive those goals? Like, what is the amount of deals you need to be doing, the size of deals you need to be doing? What is the capital requirement going to be? And of course, these goals will iterate over time. Like the 5-year goals you set now will change over the next 5 years, and that's okay. This is just direction. It's directional. It's just trying to get some kind of direction. Once we've got those goals, the next thing I take people through is what I call immersion and osmosis. So one of the best ways to learn anything and get good at anything is through immersion and osmosis. What's the best way to learn a new language? Sure, get a coach, get a teacher, find someone that's figured it out that can teach you. The second best way, or the other best way really, you ideally want to be doing both, is go to that country, go surround yourself with people that are doing it, that are speaking that language, and you will pick it up way, 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 way quicker. So I always encourage people to also learn through immersion and osmosis. And it's that who, not how mentality. So what I mean by that, let's say you want to go and do HMOs in Derby. Well, then I want you to go and find people that are doing HMOs in Derby. And you can do this by going to local networking events. And you want to go to these networking events with intention. You want to go speak to the MC at the start of the room and ask, I'm looking at doing HMOs in Derby. Who in this room should I connect with? And they'll go and introduce you to someone that's doing HMOs and go ask about their business. And if they're at the networking event, they'll share. They might even invite you to the HMOs. The second thing you can do, and I encourage everyone to do, is go on the planning portal. Every local council has a planning portal where all of the planning applications in that council are there listed, publicly available in the public domain. And within each of those applications you can click into, you can see, if it's a HMO, for example, a HMO conversion, you can see the drawings that the architect has submitted. And on those drawings, you'll see in the bottom right corner, or the top right, top left, one of the corners, the name of the architect that's been responsible for drawing those floor plans and oftentimes submitting that planning application. You want to be connecting with those architects and say, I'm looking at doing HMOs in this area. I can see that you've submitted this application on behalf of a client on XYZ road. I would obviously love to see understand what advice you can give me on developing HMOs. What are the councils like? What are they not like? What areas work best and why? What types of properties work best? And of course, these architects are going to help you because they want your business. And if they know if they can provide value to you, when it comes to you actually needing an architect, they will be the ones that will do the work for you. So just surrounding yourself with people that are doing what you want to be doing and learning from them. You'll learn through immersion, through osmosis. The second thing that I want people to think about when it comes to a strategic point of view is, do you need a business partner? Now, If you have the right business partner, you create this 1 + 1 = 4 dynamic where the output of both of you combined is far greater, exponentially greater than the combined outcomes of each of you working independently. So if you can find the right business partner, it accelerates your growth. And there is a very well-known venture capital firm over on the west coast of the US in San Francisco, Silicon Valley, called Y Combinator. And Y Combinator, they have backed and invested in some of the most successful companies in the world. Uber, Airbnb, the list goes on and on and on. They do not invest in any company that has less than 2 co-founders because they just know the data. The data suggests that companies that have 2 or more founders, 2 or more business partners, perform better. And so for me in my property investing business, I've pretty much always, especially for the last 5, 6, 7 years, had business partners. And the key with a business partner is finding someone that has the shared vision. You both want the same thing. You have shared values, and then you have complementary skill sets. So your strengths are their weaknesses and your weaknesses are their strengths. So you might be someone that's good with numbers, good at raising capital, good at the sales, the marketing side and meeting with investors. Then you might feel, actually, I don't like the construction side. The construction side isn't something you understand. It's not something you want to understand. You don't want to get involved in that. Well, then for you, an obvious business partner is someone that understands the construction side and has grown up and lived on building sites their whole life, but doesn't like doing spreadsheets and numbers and analyzing deals. And so something to think about. Now, obviously, finding the right business partner is like dating. You don't just want to get married to someone that you met at a networking event yesterday. You want to get to know them. You want to spend enough time with them, understand what is their vision for themselves and for their business and for their life. What are their values? How do they like to work? What's important for them? For me, my values when it comes to work is like, I'm 24/7. I'll work Sundays. I'll work Saturdays. I'll work till 2 o'clock in the morning if I need to. And I'm happy to do that. I sometimes struggle, or I do struggle, to work with people that want to clock off at 4 p.m. on Friday and not pick up the phone or respond to a message till 9 a.m. Monday, which is fine, but it's just not how I want to work. I like to move with speed. I like to move with urgency. I like to, whatever. Like, I have my values and I want to find people that align with that. So, question to ask yourself, do you need or want a business partner? Second thing is then company structure. What is the company structure you're going to need? Oftentimes having some kind of holding company, a trading business, and then different SPVs. Fairly simple, not something we need to dive into too much detail now. And then ignore this arrow the wrong way around. But then also what I call the perfect property business. The perfect property business is really built on the understanding of the difference between income and wealth. And with property, you can create both, or there's different strategies, different businesses that are better for both. And many studies have shown that the correlation between wealth, which is how much you own, and income, how much you make, is very weak. You've got people that make 200 grand a year in income, but really their net worth is 0. You've got people that make 24 grand a year in income, but their net worth could be 3, 4, 500,000. Now, ultimately, you want to be good at both. But property investing, buying and owning assets, is really a balance sheet game. It's a net worth game. You're building wealth on paper. Cash flow, if you want good cash flow, one way to get that is through passive income of owning property, but really is coming from selling some kind of productized service, some kind of business where you're not so much trading your time for money. There's some kind of leverage attached to it where you're selling an outcome, you're selling a service, etc., etc. And so it's just something that I kind of encourage people to think about. Is like, okay, cool. If your goal is to get to £10,000 per month with property and you're currently earning £2,000 per month or £3,000 per month, well, to get to £10,000 net income from a property portfolio, investment portfolio, you'll need a multiple 7-figure property portfolio. Whereas to get to that £10,000 a month cash flow much quicker, where it won't take 2, 3, 4, 5 years, you could go and source 2 deals for another investor, charge a £5,000 sourcing and project management fee on each one, and you've made it £10,000. Simple, but not easy. But it's just understanding the difference between passive income, active income. If you want cash flow, active income is your best friend while you're building your wealth in the background, and the passive income will come downstream from that. I've got other videos where I talk about the perfect property business. So let's move on to, well, how do we actually do what I told you we're going to do. How do we raise money for profitable deals? Well, there's basically three things we need to get good at. We need to get good at finding deals. You need to get good at finding profitable deals. So these are the three bottlenecks I spoke about. So you don't have a profitable deal, well then you've got nothing to allocate the capital into. And the better you are at finding deals, actually, the easier the money will come. Most seasoned property entrepreneurs will tell you is actually the hard part isn't finding the money. The hard part is finding the opportunity. And if you find a good enough opportunity, you'll more often than not always find the money. So we're going to talk about finding deals in just a second. The next thing we're going to look at is how do you actually raise the money? How do you find the money from private investors? And the third thing is then building the team. What is the team that you need to put this all together? So when it comes to finding the deals, there's some key understandings that I want to share with you guys. Just some basic things to kind of set the scene and set the foundations. Things you just need to bear in mind when it comes to finding property deals, because finding property deals isn't always straightforward. So the first concept I want to share with you here is a law of the first deal. And the law of the first deal is something I've come up with, or basically the point that I want to make is the first deal you're going to do, the value is not in how much money you do or don't make. The value is in the lessons you learn, the reputation that you build, and the trust that you can build with those people that are watching you, potential investors that are seeing you deliver that project. So the value is in the lessons you learn, the brand reputation that you build, and the relationships with agents, the relationships with banks, relationships with the current investor, etc., etc. And the first deal is always going to be the hardest. And so just have that expectation going into it. It's hard until it isn't. That's something you'll hear me say a lot. The first deal might take the longest, and that's fine, but you just want to get that first. So when it gets really, really hard, recognize that it's not going to be hard forever. It is actually, at the point you feel like giving up, is probably the hardest it's ever going to be, because when you do the first deal, you have better experience, you have more confidence, you have better relationships, have more knowledge, more skills, etc. So just if you're at the very early stages of your career and you're trying to do this for the first time, or raise your first bit of money, this applies to raising the capital as well. The first is always going to be the hardest, but it's hard until it isn't. The more you do, the easier it gets. Like with anything in life, if you worked in a job where it's quite a complex job, your first day on the job, it was probably very hard, very complex. You didn't know what you're doing. You just kept doing it. You got good at it. The second key point is that volume negates luck. You just need to think, how many properties would I need to view? How many offers would I need to make if I just assumed I'm the unluckiest person when it comes to doing this? And then that's the level of volume that you need to do. Most people go and view 2-3 properties and complain they haven't found a deal. But that's like telling me you've done 3 sets of sit-ups and you don't have abs yet, or you've done 3 Mandarin lessons and you can't speak Mandarin. You have to just go into this with the expectation that I'm just going to have to keep doing the volume. But again, building on my previous point, that's at the start. And the more you do it, the more you do of this, the better you get. And therefore finding deals gets easier and easier because agents know what you're looking for. They've seen you perform in your offers. So you get sent the better deals. You know what you're looking for much better. So you can quickly qualify and disqualify deals. And it actually, the number of properties you have to view to secure one deal becomes less and less and less the more you do this. But just do the volume. I've made this point already. It's hard until it isn't. Embrace the hard. Everything you want in life is on the other side of doing hard things. It's why the road to heaven feels like hell and the road to hell feels like heaven. If you want to be in great physical shape, you have to do hard things. You have to go to the gym, put yourself through pain. You have to sacrifice when it comes to diet. But that's how you get it. If you want to have a fulfilling relationship, it's hard. But it's just rewiring your thinking to recognize that hard is good. It's like, okay, this is getting hard. That's a good thing. It also means that less people are going to compete with you. That's why the money goes to all of those people that do the hard things, because Jeff Bezos, when he built Amazon, one of the most valuable companies in the world, or Elon Musk when he built Tesla, they didn't think, what is the cheapest, easiest, most simple business that I can build? They thought, what is the hardest, most painful, most complex, most expensive business that I can build? That if I pull it off, I will be greatly rewarded. So reprogram your brain to recognize that hard is good. And then flywheel effects. The flywheel effects when it comes to finding and identifying property deals is that when you go and buy a deal, agents are going to see that you're in the market, you're a hot buyer. The agent that you've purchased through, they are going to see that you've performed on your offer, so you're going to be more top of mind. You're going to build a relationship with them, so they're going to send you more deals, better deals earlier before they hit the market. And then you have access to those. And then when you perform on your offers with those, when agents just see that you're buying, you start to attract more deals. You get taken more seriously. Again, just focus on doing the first deal. It's going to be hard. Recognize hard is good. Do the volume and know that flywheel effects will kick in over the next 2, 3, 5, 10 years of doing this. Just trying to give you a reality check. Cool. So step 1 of identifying profitable property deals is you want to identify what you call your gold mine area. It's so important to hyper focus and specialize in just one area. And there's a number of reasons for this. One is the more clarity you can give to agents on what you're looking for, the better. And when you're looking in just one area, you're going to build relationships with agents better. You're going to build stronger relationships, deeper relationships with agents. When you're sourcing through agents, that is key. It's all about relationships. It's all about staying top of mind. So these agents, they trust you, they send you deals because they know what you're looking at. If you take a scattergun approach and you're looking at this huge radius of different places, you're viewing properties over here, then you're viewing properties over here, then you're viewing properties over here, you're going to struggle to build any real meaningful relationship with an agent. The other benefit of hyper-focusing and specializing on an area is that you're going to learn the nuances of that area. So even in just one area that I operate in with my commercial conversion HMO business is we know which types of properties on which particular roads are going to be best for HMOs, even just down to like the number of bricks in the loft, whether or not we can get the loft conversion to get the 2 extra bedrooms upstairs. You only get this nuanced knowledge by hyper-focusing and specializing in one area, and that is a competitive advantage. That is an edge. So just hyper-focus on one area. And when it comes to identifying the area, you want to make sure there's people in your area that are doing what you're doing. Competition is good. It shows that it's possible. If there's no one doing what you're trying to do in your goldmine area, sometimes actually can be a red flag. So if people aren't doing it, is there a reason for that? So recognize competition is good. It's a signal that there's a potential there for you to unlock. So identify your goldmine area. The next thing you want to do if you're starting out from scratch is book your first 10 viewings. Now, this is something that I tell people not to overthink about. Don't worry about whether your viewing is a great deal or not. Don't worry about doing the analysis on it. If you think it might be a good deal, just go and book the viewing. Because what you're optimizing for and what you're looking to do with these first 10 viewings is not to even find a deal. It's to build relationships with agents, and it's to get reference points on different prices and different types of properties on different roads. So of the 10 viewings you do, and maybe you meet 10 different estate agents, there's going to be some agents there that you build a deeper relationship with naturally. You build more of a rapport with. If you're a young guy into football and into cars, and you pull up in a nice BMW and the agent pulls up in a BMW, instantly you're going to create much more rapport than a middle-aged divorced woman who hates men. But equally, if you're a middle-aged divorced woman that hates men, and you view properties and you meet an estate agent who's a middle-aged divorced woman who hates men, you guys are going to build rapport, and that's fine. Now, you also want to be a bit of a chameleon. This is a skill set you can develop. It's a learned behavior on how to build rapport with people and find common interests. I actually make it a bit of a game. Like, how memorable can I become and how deep of a relationship can I build with this person in the 10, 15 minutes I'm going to be with them, and stay top of mind. So that's reason number 1, you want to do the 10 viewings. It's just to build those relationships with agents, that actually those relationships downstream from those, you'll begin to find deal. The second reason I mentioned is it builds reference points on different areas. You'll begin to spot patterns. You begin to get an idea of where the market is at. These style of properties on these roads in these areas go for this price range, and then these properties in these types of areas go for this price range. These ones are better for that reason. These ones are better for that reason. And the more you do of that, the more you dial in these kind of reference points, which is key. And so the first 10 viewings, don't worry about, am I going to find a deal or not? It's what relationships I'm going to build and what market knowledge am I going to obtain. The second thing you then need to learn and how to do is deal analysis. How do you actually look at a property, a potential deal, and run the numbers? What are the acquisition costs? What are the pre-construction costs? What are the construction costs? The project management fees? What are the finance costs going to be if we have to go and get bridging finance? What are the exit costs? What are the holding costs? What are the comparables suggest the GDV is? From that, what are the metrics in the deal? How much equity and working capital is going to be required going in? And therefore, what is the return on capital employed for year one? What if we refinance? What is the year return on capital employed going to be beyond that? You need to be able to properly analyze a deal, especially if you want to be raising finance from investors. Some people might, but most investors are not going to feel confident investing in a project if the only numbers you can show them are some back of the envelope or what we call fag packet maps, where it's just written on a piece of paper. The next thing you need to learn is how do you actually make an offer properly? There is a right way to make an offer. There is a wrong way to make an offer. And having been an estate agent being an estate agent for many years and having now an estate agency business as well, been in the game for over 10 years and overseen thousands of transactions, I can tell you there is a right way to make an offer. There's a wrong way to make an offer. And if you know the right way to make an offer, you do not need to be the highest price of other competing offers to get an offer accepted. You just need to understand how to put your offer forward in the best possible light to build as much certainty with the agent, with the seller as possible. So understand how to make offers properly, then how to negotiate effectively. Again, having an estate agency business and being an estate agent, you will be surprised, even seasoned property investors, the mistakes they make with negotiation. So you need to understand how to negotiate effectively. And you just want to keep repeating this process until you secure a deal, until you have an offer accepted. Book the viewings, do the analysis, make the offers, and negotiate effectively until eventually you secure a deal. Simple but not easy. So let's move on to the next step. So that's finding deals we've just covered. Step 2 is how do we raise the money? And there's a lot to cover here. So the first thing I want to cover is finance structures. Now, most people, maybe the reason you clicked this video is because most people infatuate with where do I find investors? How do I find investors? And when people ask me that, the first question I throw back to them is, if you had an investor in front of you across the table from you right now saying they've got £250,000 or £100,000 or £50,000, £1 million, whatever the number is, that they're ready to invest and put to work, would you know the structure of that investment? Would you know how to structure that deal with the investor with confidence? And for most parts, most of the time, the answer is no. They might have some idea, but unless you have complete conviction and a high level or a deep understanding of finance structures, that lack of knowledge is going to show up in a lack of confidence, and then that is going to show up in when you're speaking and presenting to investors. And so what I actually find is when I help people understand, they build the knowledge around finance structures, they have the confidence to actually go and speak to investors, and it's much easier to raise the money. And so if you do not understand finance structures, forget about going and speaking to investors. So step 1 is we need to learn finance structures. And that is understanding things like the capital stack. You need to understand what the capital stack is and how it works. If you don't, you're going to struggle having conversations with different investors. You're going to need to understand debt versus equity structures. Understand the difference between debt and equity and what that means. You need to understand the different security types. All of the different security types, charges, debentures, cross-collateral, personal guarantees, etc., corporate guarantees. You need to understand how to price, risk, and return. What return do you offer the investor? So it's a question people ask me, what return do I offer investors? Well, it depends on totally different things. It depends on risk. And risk is made up of many different things. Risk of the deal, risk of you as the operator. It also depends on macroeconomic environment as well, what return you can offer the investor. Depends on where they sit on the capital stack. What legal agreements you need to have depending on the finance structure. What are the different types of returns? Is it profit share? Is it interest rate? If it's profit share, how is that calculated? And when is it paid out? And how is it paid out? If it's a fixed return, Well, then how and when is that paid out, and how and when is that calculated? You need to understand how commercial finance works, because commercial finance is more often not going to be layered in with the private finance that you raise. Commercial finance in forms of bridging finance, development finance, etc. You need to understand joint venture structures and how they're structured, and different legal agreements and corporate structures. You need to understand working capital, what working capital requirements are, and how you can structure that. If there's a working capital requirement you need for a deal, well, how can you structure that with an investor? The different kinds of debt structures, different types of creative financing structures, the different creative contract structures. And so if you do not understand any of these, this is the knowledge you need to figure out that's going to help you unlock more confidence to go and speak to investors. Because, like I say, people ask me, Tyler, how and where do I find these investors? I'm like, well, if they ask you, where do I sit in the capital stack, you're going to be able to answer that question. If they're asking whether you want them to come in as debt versus equity, are you going to be able to answer that or explain to them the pros and cons of each? If they ask you, what security do I or do I not have, or can I have, are you going to be able to answer that with confidence? When they ask you, what return can you pay me, or you're trying to figure out what return you can offer, do you understand how to price that risk and therefore what return you can afford to offer and what you should be offering to attract that investor and make it a compelling opportunity for them? Do you understand what legal agreements you have in place, what types of returns you can and can't offer, how commercial finance is going to work, what banks need to see from you and from the investors in order for them to actually give you the money you need from their side? Joint venture structures. Do you know the right way to structure a joint venture where you're doing it the most legally watertight way, where you're not also leaving cash on the table and you're not opening yourself up to too much risk? Do you understand what working capital is and how you can raise money for working capital to get you in and out of deals and how you'd structure that with an investor? Do you understand the different types of debt structures, senior debt, mezzanine debt, etc., etc.? Do you understand different types of creative financing structures or creative contract structures, the difference between a back-to-back and a sub-sale, or contract assignments, etc.? This is the knowledge you need. This is where the value is. And this is the type of knowledge you need to be doing everything you can to accumulate if you want to play this game properly. So once you've accumulated this knowledge and acquired this knowledge, that moves us on to step 2. How do we actually find and attract prospective private investors? So you guys know I'm a mindset guy by now. The first thing we need to do is get your mindset in the right place going into the process of raising finance from investors. The first thing you need to do is embrace rejection. You need to understand that rejection from potential investors, it's normal, it's okay, and it's nothing to take personally. It's not always a reflection of you. It just might mean for that investor, it didn't match what they were looking for at that time. The second thing you need to understand is it's hard until it isn't. Raising your first money from private investors is going to be the hardest money you're ever going to raise. Now, it's possible. I'm going to talk about that in a second. It's more than possible. If you follow the right process and do the right things and implement the things I'm going to share with you, you can tilt the odds in your favor. But Jeff Bezos, he said that raising the first $1 million for Amazon was the hardest money he's ever had to raise. Now, he's raising money for a tech startup for the internet in the 1990s. The great thing is with property is the easiest asset class to raise money for because people understand property. They believe brick and mortar is safe rather than, of course, seed funding for a tech startup. Brian Chesky, founder and CEO of Airbnb, he got rejection after rejection after rejection for investors. Howard Schultz, the founder of Starbucks, rejected an ungodly amount of times by banks and investors for Starbucks. Rejection is okay. It's a rite of passage. It's hard until it isn't. And the second thing you actually need to understand is that investors can be anyone, anywhere. So a lot of people have this false misconception that these private investors are these ultra high net worth aristocrats that hide behind closed doors of members clubs that you could never afford to get into. That is the furthest thing from the truth. I know people that have raised money from their postman. I've had my barber introduce me to an investor. They are anyone, everywhere that could have tens of thousands of pounds of capital. You often be surprised how much money there is available out there. The other important mindset shift is that you are creating a fair exchange. You are providing an opportunity, which is something sometimes we need to rewire our brain around how we think about raising money from investors. Because throughout our whole life, oftentimes when you're asking someone for money, if you're asking a family member or a friend for money, they're doing a favor. They're lending you money as a favor. And when you're raising money from investors for a property deal, this is not a favor. You are creating a fair exchange of value. You are providing an opportunity for them. You are solving a problem for them. And so don't go into it thinking, oh, I hope someone does me a favor. It's like, no, I've got an opportunity for someone that has capital. And if you actually speak to people with capital, you'll often find their biggest problem is they don't have the deals to invest the money into. So you're solving that problem for them. You're bringing them a deal, or they have money that they want to put to work. They don't have the time to go and find deals themselves. And so you are solving that problem for them. You are providing an opportunity and you are creating a fair exchange of value. And then the final point is you don't need experience. A lot of people that come into the company, why would someone invest in me? I don't have experience. And there's really two really important key answers to that question is, first of all, just because you've never done a property deal before doesn't mean you don't have credibility. And so I'll talk about this on one of the next points, but you really want to, I take people through an exercise on how they can basically position their credibility and authority based on previous achievements in different areas of their life. So that's point one. Point number two is actually, it's not about your experience. It's about the experience of the team that you're going to build. So even if you've never done a property deal before and you're presenting an opportunity to an investor, as long as you can substantiate all of those numbers, and you can say the construction cost on this project, the way I've arrived at that number is I've had a quote from a contractor who has done over the last 10 years countless refurbishments just like this one, and they're happy to sign a fixed price contract at this price. And here's examples of their previous work on their website. Suddenly that builds credibility. If you say, here's my commercial finance broker who was voted commercial finance broker of the year at this award show, or nominated for commercial finance broker of the year, and he's placed over 100 million in commercial finance or 10 million in commercial finance, and he's registered with the FCA. Great. Here's my commercial property lawyers. They're going to be representing me on the transaction, doing the legal due diligence for us, etc. Your project manager, here's my project manager, etc., etc., etc. And you do that for your whole professional team. The spotlight for experience is on them. And if you look at any pitch deck of any company outside of property that's raised money, one of the first slides is the team, because investors want to see who is the team. And if you can demonstrate that actually the team that you've assembled have credibility, have experience, that is pretty much always builds enough trust from the investor, because your job, to reiterate, is to find the deal, find the money, build the team. So the investor that's putting the money with you, they want to make sure the deal is good, and you want to be able to go through and substantiate all of the numbers through your deal analysis. But then at that point, your job is just to oversee the team that's delivering the project. So that's mindset, getting your mindset in the right place first, making sure you haven't got limiting belief systems around raising money. So step one, how do we actually go and find investors? Well, the first thing we want to do is set up our investor CRM. So we give all of our clients a template, investor CRM, so you can start putting down the names of potential investors you're meeting, because you don't want to be storing them up here. You always want to be raising finance in this game. This is something that you need to understand if you want to become a high-level property entrepreneur, is you want to always be raising. You're always building these connections. You're always having conversations with investors. It's something you always want to be doing. Whether you've got a deal or not, you always want to be nurturing and building these relationships. And so having some system where you can store these names and numbers and notes on the previous conversations you had to them is going to be key. Otherwise you'll forget. You'll forget when you last spoke to them, what you last spoke about, and when you have a deal, an opportunity that you're ready to go and raise the money for, having a list of names of people that you've nurtured is much better than just trying to remember their names up here. The second thing you need to learn is the different types of investor profiles. Different investors like different things. You have, at the retail investor level, you've got very unsophisticated retail investors, and you've got some sophisticated retail investors. You've got angel investors, you've got venture capital investors, you've got family offices, you've got private equity, and the list goes on and on and on. And it's just understanding what are the different profiles of investors. You've also got high net worth individuals, ultra high net worth individuals. Different investors like different things. They like different asset classes. They've got different risk appetites, different amounts of money that they like to invest. And this form is really important on the second part of finding investors, which is having that conversation, that discovery with the investor to understand who they are. So you want to understand that not all investors are the same. And so once we've ironed those things out, well, we have a framework. I have a framework with the 4 pillars framework, which you can use to go and find investors, to actually go and get the attention of investors. So let's dive into that right now. So this is the 4 pillars framework. And the 4 pillars framework is a proven, because I've proven for it to work along with many other people that have gone through this process. It's a proven 4-step process for finding and attracting prospective investors. Because raising finance from investors is simply a marketing and sales process. It's marketing because you need to get the attention of prospective investors, and it's sales because once you have that attention, you need to convert that attention into a commitment. And so this framework, this 4 pillars framework, acts as the marketing element of this. It's used to get the attention of an investor with a goal to book in a discovery call or a meeting with any interested leads. And so step number one is really looking at your personal and professional network. And we do this for an exercise called the 2 degrees of separation exercise. And ultimately, it's where we're approaching the low-hanging fruit. We're contacting individuals that if they know you on a first-name basis already, I can make an assumption that they already somewhat know who you are. They already like you to some extent, and they already trust you to some extent. So they're not complete cold strangers that have never seen your face or heard your name before. And so the first thing that we help our clients do that go through this process is identify individuals that you know on a first name basis. And we use the following prompts: friends, friends of friends, family members, family friends, work colleagues from both present and old, clients that you have in your work, previous clients, going through your Facebook friend list, thinking of your old school friends, going through the contact list on your phone, thinking of solicitors you know, accountants that you know, and just writing the names. And once you've got these names, what you're then going to do is send them a message, which I know for many of you that might feel quite daunting, just reaching out to them out of the blue. But there's a very specific script, a very specific message that you send to these people. And most of the time, or in fact, all of the time, when people hear what that script is, it actually feels, they're like, oh, that's much easier. And when you send that message, lo and behold, you're looking for a positive response. And when I take people this process, they are always surprised at the amount of positive responses they get and how much money is there in their network already. Most people have no idea and they're shocked. It's a huge revelation. Like, I didn't know there was all of this capital available to me out there, or potentially available to me. So you want to send that message, and what we're looking for is a positive response. And then, again, using a similar script, we take that positive response into a booked meeting or a booked call, which is step 2 of the raising finance process we'll come on to. And also, what I failed to mention here is with step 2, we're looking to identify not just if they have an interest in working with you, but whether they know anyone that might have an interest in working with you. So if you can come up with 10 names, 20 names, 30 names, each of those names, they all know 30, 40, 50, 100 different people. And so through 2 degrees of separation, i.e. the people you know who they know, you really have access to what could be thousands of people. And people that you know who they know, essentially the 2 degrees of separation away. Even if they don't know who you are, there's what's called a trust transference. And so if a friend introduces you to that person, it's a warm introduction where that what's really a stranger to you. If your mutual friend vouches for you, that's an immediate transfer of trust. That's why we call this a low-hanging fruit. So pillar number 2 is getting in the right rooms. So it means going to where the money is. So think auctions, property auctions. What type of people go to bid at property auctions? People that have money, that want to put it into property and want a good deal. But is everyone that goes to a property auction successful in their bidding? No. And where are property auctions held? Hotels, golf clubs, country clubs, where there's a bar outside. Before, after the auction, you want to be there connecting with people, introducing yourself to people. You want to go to property networking events, and also you want to go to business networking events. Because at property networking events, often you find 99% of the room are looking for money and 1% of the room have the money. Business networking events, you're the one person that's a property investor that is raising money. The other 99% of people are their successful business owners that are so caught up in their business, have retained profits in their business or various savings, they've just not allocated time to think about where they can invest it. Perfect. So go to the right events, go with intention. There's a clear script or a clear way to introduce yourself to someone and progress the conversation properly, because the best metaphor for raising finance is it's dating. And if you're trying to get lucky or get a boyfriend, get a girlfriend, you don't go up to someone and within the first 5 minutes ask them, do you want to have sex with me? Which is equivalent to asking someone, do you want to invest in this deal? Or do you want to invest in property? No. You have to nurture them, get that coffee meeting, take it step by step to build that trust. Pillar number 3, LinkedIn outreach. You want to utilize LinkedIn's targeting tools to connect with high net worth individuals in your area. This is the beauty of LinkedIn. LinkedIn, you can literally search across your area, your county, your town, your city that you live in for business owners, founders, CEOs, CFOs, partners, managing directors, chief financial officers, etc. These are all people that are going to be higher net worth people in your area. So there's a way you can connect with them, and there's a script, an outreach script that you can send to them. And then also if you're posting some content on your LinkedIn, which is a whole other video, you can build these connections. And then that connection, those messages can turn into a meeting, and that meeting can of course turn into an investment. And then pillar number 4 is building an attraction business. This is essentially the nirvana of capital raising. When you can properly utilize social media to build a personal brand, what you're essentially doing is you're building these digital assets that work for you 24/7 to generate trust and attention of prospective investors. And that's what content is. That's what this video is that I'm creating. It's a digital asset that I create once, but it's working for me 24/7 all around the world. I know whoever's watching this right now could be watching it at any random time of day, anywhere in the world. And for me, that is the greatest form of leverage, is building trust and attention to my messaging. And this is a digital asset, and income follows assets, which we know. And so creating content, it's for a lot of people, there's a lot of uncertainty doing this. It can be quite a scary thought, creating content if you've never done it before. There's a right way to do it. There's a wrong way to do it. And I've coached a lot of people over their fears and over their limiting beliefs to create content successfully and build a personal brand. But when you have digital assets working for you 24/7, you no longer have to chase the money. The money chases you. And final point on this is there's 2 ways to think about creating content. You're not always creating content at the start to get new eyeballs and new attention. Think about creating content to create assets that nurture existing relationships that have originated offline. So imagine you meet someone at a property auction or a business networking event, you connect, they follow you on Facebook or Instagram or LinkedIn. Then the content you put out is nurturing that relationship. Rather than you having to constantly check in with them daily and give them value, they're scrolling their feed, they're seeing your face, seeing your name, impressed by what you're talking about, you're nurturing them. And eventually they're going to bite. Now, you might be asking, does this work? I want to share with you guys just some examples. Like if I really went through my messages, I could find you countless examples. This is a message I got from a gentleman saying, he owns a successful construction company and wants to get into HMOs, and sent me a screenshot of his bank account. £1.3 million there. Saw your YouTube video, really aligned with me what I'm trying to do. There could be real synergy, etc., etc. Another message. Hi, Mr. Newman. Your videos have put on my feed several times. I was really hesitant about texting you. Hope you have the time to reply. We have some savings. Really would like to invest in properties, etc. We have a decent amount of savings. £200,000. Hi, how are you? It's been a while. I have £300,000 to £500,000 to invest. Any deals? Jumped on a Zoom call. Hello, mate. Want to get a coffee? This is someone I met at a networking event. I was invited to it's actually a private dinner event. Connected for 2 months. He saw my content. And then at the event, we spoke about getting a coffee at some point, but I was traveling. I was away. He said, do you want to get that coffee? I'm in Barcelona next month, but in London for 2 more weeks. Not invested in property before, but open to it. Of course. Cool. Went and met for a drink or a coffee. This was someone else I met at a dinner through a friend. I have a spare $550K that I need to deploy by December. So if you guys create an SPV, a special purpose vehicle or a limited company to raise the investment and have room, let me know. This is another one. Hi, Tyler. Hope this message finds you well. I caught your interview on a podcast with Jack Smith and was impressed by your insights. I have a national portfolio and currently have £500,000 available to invest. I'm open to deploying these funds for good opportunities as either bridging finance or through joint ventures with you and your network. And I could show you countless messages like this. It's because I've learned the skill. I've acquired the knowledge and all the finance structures, and I've acquired the skill. I've been able to attract and nurture and build trust with investors. So we'll keep moving on, but really at this point, think how valuable would this be for you if you could acquire this same skill set, this same knowledge, the same process, and unlock that bottleneck of capital. So you could go and do the deals that you want to do, which could generate you tens of thousands, hundreds of thousands, or even £1 million of profit over the next 1, 5, 10, 20 years. So moving on from that onto step 2 is, well, how do we actually generate commitments from investors? Once we've followed the 4 pillars, we've got a bite. We've got a signal of interest from an investor where they said, I'm open to a conversation. And that's what you're trying to do from that process. You're not trying to sell an investment. You're trying to sell the meeting. So say, this is what I'm doing. Would love to have a chat. Let me know if you're interested. Get that meeting booked. Step 2 on the meeting, what we're then trying to do is generate soft commitments. And the way we do that is, the first thing is I take you through a process or an exercise where we want to create your authority, positioning, and credibility. And I spoke about this before, but it's understanding that even if you've never done a property deal before, it doesn't mean you don't have any credibility. And so recently I was at a boardroom event helping some property professionals, and one guy just recently got into property, and I asked him, like, what's his background? He said, I've worked for Tesco for the last 15 years. Now, when he said he works at Tesco for the last 15 years, for me, I think, okay, well, he's worked at Tesco probably stacking shelves for the last 15 years. Once I dug a little bit deeper, he was a store manager of Tesco. Okay, cool, I can make some assumptions. He's good at leadership and good at managing people. And I said, well, the biggest Tesco store you were a store manager of, what were their revenues? And he said £2 million a week. So, oh, okay. So you were the manager of a £100 million per year operation. He's like, yeah, I was the top person in a Tesco store, did £100 million a year in revenue. And how many people worked in that store? He said 100 people. And so that is a difference between I worked at Tesco for 15 years versus I was a store manager at Tesco, managing a £100 million a year store and being responsible for 100 different employees. Now, even if he's never done a property deal before, putting yourself in an investor's shoes, would you trust that actually he's probably competent enough to figure his way out through a property deal, managing a contractor, managing a project manager? Yes. And there's countless examples of this. I worked with a friend that was in the military. He said, I was in the Air Force, the RAF, for 10 years. I was like, okay, cool. Well, just knowing that, it's hard for me to really understand more about who you are. And turns out he was responsible for 25 to 30 people going into basically high-risk missions. So he was responsible for 30 lives. And one most notable mission he did was extracting a highly valuable military asset out of a war zone. And it took weeks of planning. There were lives on the line. There was tens of millions of pounds worth of military assets on the line. And he was responsible for planning and executing that perfectly. And obviously he executed it well. And so that, again, is just taking the exact same thing, but the positioning alone creates more authority and credibility. And I could do this with anyone. I promise you, you give me anyone, I can create some kind of authority and position. Some people are going to have more than others, but it's just taking who you are and just framing it, positioning it in the best possible light to build that authority, because that is what's going to help you tilt the odds in your favor. You, of course, want to have that discovery meeting. So on the discovery meeting with an investor, what you're looking to do is essentially find out a handful of things. One, what is their level of intent? And their level of intent is just a fancy word for how motivated are they? Are they looking to deploy funds right away? Like, have they got the money sitting there in a savings account, earning them no money that they want to put to work ASAP? Or are they looking at a 12-month time horizon? Or are they just kind of browsing and understanding their options? That level of intent is going to then help you understand how do you take that conversation from there. What is their level of awareness? Which is really just, again, a fancy word for how sophisticated are they or how educated are they? Are they someone that has invested in property before? They have a detailed understanding of the different finance structures and corporate structures, etc. And they understand the different finance terms of senior debt, mezzanine finance, equity, etc. Or are they someone that doesn't even know what the word HMO means and has never made an investment before in their life? Because understanding their level of awareness is then going to help you figure out what direction do I take the call. If they are less aware, less sophisticated, less educated, you take more of an educational approach with that potential investor. If they have a high level of awareness, then often it's about the numbers, it's about the risks and the mitigation for those risks. And then the third thing you're trying to figure out is basically the qualification. How much capital do they have available to invest, or how much they're looking to put to work, or how much they're looking to start with? And then what kind of returns make sense for them, and what are their preferred finance structures, if any? That's what we're trying to figure out from a discovery meeting. It's also the opportunity for you to present to them what you're trying to do. And at this point, rarely are you pitching a particular deal. You can talk about a particular deal that you've got, but you're not pitching it. What you want to do is go into that meeting saying, this is what I'm planning on doing. These are the deals that I'm doing, whatever. And you're just trying to establish good fit. Are they potentially someone that aligns with what you want? And are you potentially someone that aligns with what they want? If there is good fit, great. That's when you then move on to the next step. But you want to have that discovery meeting, and really the objective of that discovery meeting is to get what we call a soft commitment, where they say to you, look, hey Tyler, I like what we've discussed. I've got about 200K that I'm looking to put to work, and if you can show me an attractive deal or the right deal that matches what you've told me you're looking for, then I'm happy to kind of start with 100 or 150 or the full £200,000. That's what we call a soft commitment. It's them saying, subject to you finding me the right opportunity, I am open to putting X amount of money to work. You're getting that soft commitment. So you don't even need a deal at this point. You don't even need a deal, an opportunity to present to them. And this is why you want to be doing this process all the time. All the time, even if you don't have deals, you're just having these discovery meetings, saying, this is what I'm doing, getting that soft commitment. And then once you've got that soft commitment, this is when we then, next meeting, when you also then have secured a deal, we go and pitch. And that is then another meeting. Now, you can do it at the same time, but I always rarely have I ever secured an investment on one meeting. First meeting is discovery. You could then have various meetings that just nurturing, catching up, getting to know each other. But then you have a meeting where it's pitch. You're presenting an opportunity. And so the first thing you want to do is create a pitch deck. You want to be able to clearly showcase the project. And a pitch deck is made up of a whole host of things. That's a whole other 2-hour video I could put together on how to put together a proper pitch deck. And we actually provide a pitch deck template and training for our clients. But you want to be talking about who is the team, putting the spotlight on the team, putting the spotlight on them in the best possible light. What are the financials and the projections of the deal? You also want to talk about the location, etc. And then risks and mitigations. What are the potential risks in the project? The construction risk, planning risk, execution risk, exit risk, market risk, financing risk, etc. What are the ways you're mitigating those risks? So pitch decks are a whole huge topic. But you want to put together a solid pitch deck, again, if you want to increase your chances of raising the money. You then want to overcome objections and questions. You're going to have investors throw questions and objections at you. You need to know how to answer. And this is where, again, knowledge is going to be key. And the sophisticated investors, you need to be able to hold your own. If they sense any element of weakness, and they're talking putting hundreds of thousands of pounds or tens of thousands of pounds of their hard-earned money on the line, well then, they sense any lack of confidence, or you're just not able to answer with conviction, that can be enough to turn them off. That can be enough to turn them off. And then ultimately you want to close for the commitment. When you close for the commitment, you want to prepare and sign the legal agreements. And so a final point on this, I want you to think about Dragon's Den or Shark Tank. So we've all probably seen the TV show at some point, Dragon's Den or Shark Tank in the USA and Australia as well. And think about when a business owner goes onto Dragon's Den to pitch for the investment from the dragons. Not all the time do those business owners leave with the investment. Why? Well, it's not because there was a lack of investors or a lack of money. There is an abundance of money and an abundance of investors out there in general, but in that room, of course, the money is there, the investors are there. But also, that is a belief system you need to adopt. There is an abundance of capital out there. It is the most available resource out there. There is more money out there that you can possibly fathom. Your brain can't comprehend it. But in the Dragon's Den example, in the Dragon's Den, the business owners that don't raise the investment, is it because there's a lack of money? No. But why is it? Maybe their opportunity wasn't attractive enough, which is important to be able to find and identify good opportunities. Oftentimes, the business owner can't answer the dragon's questions with confidence, or they can't answer them straight. And they just end up, not answering the questions properly, upsetting the dragons, frustrating them, etc. Sometimes there's a personality conflict. Someone can come across quite combative and not build rapport. The dragons might have the money, like the business, but just because of the personality conflict, they won't invest. So it's a very important thing to kind of understand and study. Rarely actually is, if you fail to raise the money, it's not because there's a lack of capital out there. It's because you haven't found a solid enough opportunity, you haven't built a trust or rapport with an investor, or you can't substantiate the numbers and showcase the deal in its best possible light. So then, once you've closed for the commitment, you then want to prepare and sign the legal agreements and progress things to the next stage. And then you have deal closed. And voila, you've done the deal. And so there's a lot to take in there, guys. And for those that have made it to the end of this video, I'd love to, really, it's with great pride that I can present to you our consulting program, Property Blueprint. And really, Property Blueprint is where we'll work one-to-one with you to help you raise at least £100,000 or more in private investor finance, executing the same step-by-step process that I've shared with you, holding you accountable through it, giving you all of the scripts, all of the templates, all of the documents, and doing it in the next 120 days, guaranteed. Or we'll work with you until you do. Now, a couple points on this. Although this is a proven process, you must remember that although I can provide the map, you still have to climb the mountain, because you are the only one responsible for your success. No one is coming to save you. And so the people we can help doing this are those that are all in on their goals. If that is you, we can help you raise at least £100,000 in private investor finance. Those that want to play a bigger game in life, I like helping people. I like working with people that want to play a bigger game, don't want to play small, want to swing the bat and go for the big leagues. Those that are ambitious, are driven. If that is you, we can help you achieve this. And those that understand that winning isn't easy and it requires tolerating lots of uncertainty, stress, failure, risk, emotional turmoil, etc., but are happy to pay that price every day of the week and twice on a Sunday because they like winning. And again, just setting expectations here, guys. We can help you do this, but want to make sure you're all in, because this is possible for you. It's been possible for a lot of people that we've helped, for everyone that we've helped. And there's some people we can't help. We can't help people or don't want to help people that just want to stay in their comfort zone. If that is you, if you just want to stay in your comfort zone, unfortunately, no one can save you, frankly. Those who want to play it safe or play small, this isn't for you. Those that just want to click a few buttons and get rich quick, this isn't for you. Those with the victim mentality and will blame everyone else but themselves, this isn't for you. And those that just want us to do it for them, hand them the investors on a plate and not actually learn the skill themselves, That's not something we're going to do, etc. So really, the goal is we guarantee to help you raise 100,000 in private investor finance and secure a profitable deal, a deal that could generate 30, 40, 50,000 pounds plus minimum in the next 120 days, guaranteed. And we'll work with you until we achieve that. And so if that is something you want help with, below this video, there will be a link to book in a call with myself and my team. There'll be a number of questions you'll just have to fill out to book in the call, so we have better context on who you are, helps us prepare for the meeting, and maybe send any particular resources ahead of the meeting as well that might help you. And on that link to book in a call as well, there should be a demo video breaking down our property blueprint consulting program in a bit more detail. And a couple final bits to finish us off. Winning has a price because it costs effort, discipline, uncertainty, stress. Losing has a price because it costs regret. Since you're paying anyway, pick carefully. If you're someone that wants to win, wants to play a bigger game, wants to execute and go through this process of sharing with you that you understand the value in this knowledge, in this skill set, we'd love to work with you. And so if you're questioning, will this work for me? Well, the next question I ask you is, will you take action? If no, it won't work for you. If yes, my next question is, will you keep going when it gets hard? If no, then no, it won't work for you. If yes, well, my next question for you is, will you follow the proven process rather than trying to deviate and figure things out on your own and try and come up with the new ideas? If the answer is no, then it won't work for you. If the answer is yes, it will work for you. Hopefully there's a lot of value in there, guys. Book in a call using the link below. Look forward to working with you and speak soon.